Hi, this is Tom Essaye from Money and Markets TV. Being a true contrarian investor isn't just about buying unloved stocks or sectors of the market. It's also about finding indicators that the crowd doesn't follow, indicators that can help give clues to the next move in risk assets. Of course, the US dollar is one of the best indicators of risk sentiment. When the dollar goes up, it usually means investors are seeking the safety of assets like treasuries. And when it falls, investors are moving to riskier assets, such as stocks and commodities. But while the US dollar tells us about the risk appetite at that moment, contrarian investors look for leading indicators that hint at the future. That's where the Australian dollar comes in. Australia's economy is heavily reliant on exporting its industrial commodities, including iron ore, coal, nickel, and uranium. As a result, the Aussie economy grows when the global economy, and in particular China, is growing. And it shrinks when global economic activity is declining. But because Australia exports commodities that are so closely linked to economic expansion, its economy usually starts to improve before the rest of the world, as companies and governments begin expansion projects. The opposite happens during times of global contraction. Furthermore, Australian dollar rallies and falls with the economy. When the economy gets stronger, the Australian dollar surges as markets anticipate rising interest rates to combat inflation. And when the economy stalls, the markets anticipate interest rate cuts to stimulate growth, hurting the currency. You can see the predictive power of the Aussie dollar in this chart. It peaked in early March, way ahead of the stock market and before the commodity markets broke down. And more recently, the Aussie dollar put in a bottom before the stock and commodity markets rallied. Right now, the currency is facing overhead resistance. But if it breaks through that resistance, it could indicate that risk assets like stocks and commodities are about to turn higher. Likewise, if the Australian dollar falls, it'll be a sign that the weakness we've seen in stocks and commodities is probably going to continue for a while longer. One way to play an upturn in the Aussie is by investing in an ETF that tracks global shipping. After all, if Australia's economy is gathering momentum, the rest of the world shouldn't be far behind. The Claymore Delta Global Shipping Fund holds shares of international companies that are involved in shipping oil, natural gas, and other commodities around the world. And if you want even greater profit potential, consider individual shipping companies, like the one my $1 million contrarian portfolio members are holding right now. I'm recommending this play because I feel that from a growth standpoint, the worst-case scenarios have already been priced into the sector and shares. So if we get any sort of uptick in global growth, which the Aussie dollar is telling us is a real possibility, these stocks could skyrocket. I'm Tom Essaye from Money and Markets TV, and thanks for watching.